Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And I want to do a video for you. We didn't have a whole lot to talk about today. The markets haven't been moving a whole lot since the beginning of the week. Monday wasn't too bad, but otherwise pretty well sideways. I just wanted to bring all of this to your attention and show you kind of where we're at. We are starting to get very, very close to a topping point. If you follow other blogs, I'm sure you've heard it 100 times already, and it's on and on and on. But I'm here to tell you that we really are. I mean, we're really that close. Some blogs have been talking about a top for probably a month. It's stuff like we're way too overextended, and look at all these indicators I have on my chart that tell me that we're going to go down tomorrow, and none of them have come true. But we really are hitting a topping point now, and you need to start preparing yourself for such. So the reason I'm doing the video is to let you guys all know out there that if you want to go long, that's great. I certainly have no problem with that, but you have got to be very, very cautious with any and all long trades that you take over the next, I'd say, week or so. I would expect to see something by the end of next week. As we enter options expiration, that's next week. We might be able to drag ourselves up, but I think we're going to see more of the same. Kind of maybe more of this up and down and up and back, and then up higher and then back and then up a little bit and then back and then up higher. We can maybe continue with that for another, finish this week and maybe into next week. But then I think by the end of next week, with options expiration and the extra volatility that usually brings with it, I would expect to see some more major movement in the markets. Could start as early as tomorrow, but I would say by next Friday, we'll start to see that. So in your long positions, what I don't want you guys to be stuck with is I don't want you to wake up one morning and go, oh my gosh, the markets are down 25 points or whatever to start the day, and I'm in this trade, and now what do I do? And I don't know if I should get out, and I don't know if I should stay in. And it's probably just better, you're better off to just really, really manage those trades really well. Long stocks overnight, maybe not so bad, but long ETFs, anything that applies to an indice or a sector, such as FAS and FAZ, which we'll discuss later on in this video, probably not so much. I'm not real keen on holding a lot of those overnight in the hopes that, I'll wake up to a 2-point gap or something to the upside. You're really at this point better off playing defense than you are playing offense, and kind of exiting your trades or hedging your trades at the end of the day, and then looking for a re-entry point the next day. It, in most cases, is going to give you one of those from day to day. So just be very, very cautious with your trading. So let's whip through the charts, and I'll show you kind of what we're looking at. The Dow has now broken this line and been holding this, the backside of this line for quite a while now, acting as very, very good resistance. So if we make it up and into this 12.9 or 13,000 area, that's where you need to be extremely cautious with the Dow. We are nearing what I think is the top of a wave 5. There's a lot of different counts out there, but I think we're into what is like the wave 5 of 5. Now, there's been 100 wave 5 of 5s on the way up, so I'm still playing it with caution, but I do believe that this could be the final one, finally. So anyway, you're looking for any hard moves to the upside, but you want to be cautious with any long trades. I'm actually more apt to look to build a short position up here, or to start slowly getting short. Don't dive in. It's not how you build it. You don't catch a falling knife in those type of scenarios. You want to stay away from that. Okay. So if you're going to go short, go small short. And you can always build later on. It's not a big deal. And that way, if you wake up in the morning and we gap up or we run up, you're not like, oh, what am I going to do now? I got no capital left and no way to add to this short and no way to build on it. And if I get out now, I lose my butt. Don't be that person. Okay, build it and build it in small incremental steps. You'll have time to add to it later on. Even if we go down, you'll have time to add to it later on. It's not a big deal. Dow daily, same type of thing. This whole motion's been up, back, up, sideways, up, back, up, a little bit further back. Up, sideways. It's lather, rinse, repeat for the bulls. They refuse to give up. And this has been going on since the middle of December. That's why at this point, based on what I see in front of me, we're really, really starting to hit those last few stages, in my opinion, of this move to the upside. So be very, very cautious. If we can break these 20-day moving averages, those will be your new marks to really watch. Okay, so 20-day moving averages should be on everybody's radars for from this point forward. Really watching those. Those are your more conservative places for your short positions. Nasdaq's been a monster. Really been watching this thing hold beautifully to this lower line, and still watching for it to hold nicely to this lower line. Any further hard pushes to the downside, you're looking for breaks down here around the 2500 area. That might be a signal for you to kind of back off on the longs a little bit, or maybe enter a short position. Look for possibilities there. But as it is, it's up, sideways, up, sideways, up, sideways, up, sideways, up, and sideways. So until we see these lower levels break, there's really not a whole lot to talk about in the NASDAQ, except that it has been a total beast. The NASDAQ and the Russells have been monster indices. Okay, so more of the same up here. I just would tell you, stick with it until otherwise proven. Got to break these lower levels back here, as I was showing you on the previous chart. From a weekly too, you can see the big run we've had since 2200, and we're already above 2500, and the pressure continues to the upside, but still not feeling good about holding overnight or for any length of time. So be very, very cautious, please, with any long positions. SPX 60 minutes, same type of thing. 1, 2, I don't know, 3, 4, 1, 2, 3, 4, 5. I don't know. It's really hard to count. Very, very difficult to count. 1, 2, 1, 2, 3, 4, 5. Okay, I don't know. I really don't care at this point. All I know is that we are dangerously close to a top up here. So above that 1350 mark, 1360 maybe could come into play. But be very, very cautious on any long play. 10 points, probably not worth it to me, really, to be honest. In a possibility for a hard swoop to the downside, probably not worth it to me, if I'm just being honest. Lower levels down here I love. Really watching that 20-day moving average, even on the SPX. Look at this hard push to the upside. This will be, I think, the bigger icebreaker down here. If we can get back below this line and close below this, I think that'll really start to wake things up. I also like the 1320 and 1330 areas as we push our way downwards. Just keep in mind, very extended up here. The VIX, here's something that's very curious to me. The VIX is really going nowhere. Can you see how we've had pushes down into 16 not once but twice, and they don't stay there? The market from a volatility index side is very aware, acutely aware, that we're very extended at this point, and it's well established within the VIX itself. If you can get this thing down into these lower levels, that's a great opportunity to look at some options. That's when the volatility is the lowest, and you tend to get a better price on some of your options. But I'll tell you what, it would be manna from heaven if we could get this thing back down into the 15 or 16 range before a major pullback happens. I just don't think we're going to get that. I just can't believe it that we're going to get there. So watch for this thing to stall out here somewhere between 16 and 17. 16, if it gets below 1650, we're lucky, but somewhere in this area, watch for it to kind of stall out, and then maybe we start to see that roll over as the market gives us our pullback. The VIX should spike, and at least for a few days, maybe a couple days of that kind of action. But right now you can see the VIX comfortably, quite honestly, it's comfortably between the 15 and 20 range, which is where the complacency is for me. I like to see that complacency issue between 15 and 20, and it's there. It's just cautiously poised, I should say. And I do expect that when the pullback happens, this thing will spike above 20. I would guess we will see that. From a weekly, it's been a long grind to the downside, but that has continued to keep the pressure. Any time we get back into the 16, it doesn't last long. And usually it's met by some sort of it's usually just a flick on the radar screen. Nothing that hangs around or is content down here, or too content down here in these lower levels. So we stay firmly at and around the 17 to 18 range, still showing complacency in the markets. FAS in a very, very choppy sideways trend. This could be a very nice 1, 2. All of this is 3. ABC for 4. Working on a 1 of 5, 2 of 5. If we get a big blast off to the upside, I think that's 3 of 5 with a 4, then a 5 of 5 yet to come. Your mark to watch is over 91 and below 87. Those are my 2 marks for you guys to keep on your radars in FAS. The same thing is true on a daily. It's holding beautifully to the 200 day. Notice how we duck below it, but we always close above it. So 3 days in a row of that just has to put me more bullish than anything on this particular move, even as extended as we are. I'm just not sold on holding overnight. So don't mistake what I'm saying. I'm not saying don't go long. I'm saying be cautious if you go long. Difference. Okay, so don't be afraid to maybe play this during the day to the long side, but you have to manage it and you have to be cautious and watching it at all times. FAZ is then, of course, in the boat, just in an inverse, and that is below 25 and above 27 is this $2 range that we've been traveling in. Prices above and below that are your areas to be watching very closely as we push forward. Could also be the same 1, 2, all of this could have been a 3 with an ABC 4, and now we're working on yet one last 5 down to complete whatever this move is going to be. That as I said, that could complete tomorrow. Maybe we've already finished the wave and it's over already. If we haven't finished the wave, it could grind its way down for the next 5 days and take us into the mid to late next week. Who knows? I'm just saying, this is where I think we're at right now. This is where you need to be watching if you're an FAS or FAZ player. From the daily, beautiful falling wedge here. Every time we try to get out of it, it seems like we find our way back into it. So really watching this level closely, but nothing's changed. 25, 20, yeah, I'd say 20, really 26 and 27 is pretty much where we've been trapped. So that little $1 to about $1.50 range or so is where this thing's been holding out for the last few days. Looking for the drop or the rise, whichever one. If we can blow up and through this 30-32 area, then maybe we've got something to really talk about in FAZ. But until then, if you're trying to go long down here and you're not doing it in small incremental steps, you're trying to catch a falling knife. And you're going to get cut. And you're going to blow up your account. Please don't be that guy. All right, guys. I'll try again for another video sometime this week if we see some real motion. But otherwise, if you like these videos, I do them every day except for Saturday. In the subscribers, they're $1 a day, 28 bucks a month. You can cancel anytime. And I have the mentoring course. You guys really want to learn how to trade and trade like a professional. The mentoring course is definitely for you. Send me an email about that if you have any questions on it. And we will see you guys hopefully later on this week. Bye.